Hello and welcome back to the Rekt Capital channel, and welcome to today's video about the Bitcoin crash continuing. We're seeing further sell-side action in Bitcoin's price action, and if we just look at this weekly candle close, which we just got today, we saw that the weekly candle close closed above the 200 weekly exponential moving average, and this is a important long-term gauge of investor sentiment. So as long as price is above that level, we can be bullish as investors on Bitcoin. But the thing is, we've seen that in this week, we've already seen sell-side action towards the downside, which is actually reaching a very confluent area that I'm going to talk about in just a moment. But the thing to note here is that even though this exponential moving average was figuring as a support, it actually looks like it's figuring as a resistance this early in the week, and we really need to pay attention to this moving average, to this level, which is around 5,300 roughly speaking. We need to pay attention to this level whether or not we're actually seeing resistance here, whether or not price is actually going to get rejected over here, and that's something to look for going forward. But the confluent area that I want to focus on here is that this is the top of the ranging period in the previous cycle that we saw. So we saw this ranging period above the 200 weekly exponential moving average. We saw consolidation over here. This was an accumulation period for bargain hunters, and then we saw a breakout towards the upside, a fantastic 200% plus move towards the upside, breaking past 4,150, and now we're currently at that region again, testing what was previously a resistance, now as a new support. But this recent support bounce only got us just as far. We're now at this potential resistance, so that's something I'm watching for, because of course, if you guys remember the schematic that or at least the chart that I shared a few days ago in a recent video, this is going to be a little bit outdated, of course, because this was last week's candle, so it doesn't have this week's candle. It doesn't have that in the chart. But essentially speaking, if we want to see trend continuation following this pullback, this successful retest attempt so far, if we want to see trend continuation, we have to see buy volume come in. We've seen a lot of sell side pressure. That's definitely, without a doubt, the case, that we've seen a 53% crash in Bitcoin's price action, one of the worst crashes in the history of Bitcoin's price action altogether, and we've seen a lot of sell-side pressure. But the thing is, are there any buyers? Are there any buyers at all? And is there demand at these levels for there to be trend continuation going upwards? And historically, fear precedes financial opportunity, extreme fear in particular, and we're definitely at the extremely fearful levels when looking at the fear and greed index. You can see here that historically, we tend to see Bitcoin price reversals, whether they're entire swing trades, whether they're just small relief rallies towards the upside. And I know that it's unprecedented circumstances right now, but the thing to also bear in mind is that in February 2018, we saw very similar extremely fearful levels. And of course, at the same time, we saw this around here as well, and around here as well. We actually saw a relief rally in Bitcoin's price action around 10K before actually suffering further downside. But of course, around here, we saw a rally that was much larger. In fact, that was the time where we were seeing the ranging period that I mentioned before. So that was this ranging period, February, around here, right? So we saw that extreme fear was around in this area, and then since then we saw a 300% rally towards the upside. So it's interesting because this was a bullish context for price because it was on a ranging period. It's interesting because this was the beginning of the correction after that exponential movement towards the price action, so towards the upside at least. So that was August 2019, so around here, roughly speaking, wherever that might be in particular precisely is beyond the point, because we just saw a relief rally before further downside in terms of the correction. So it's interesting to see how we're at a very similar extremely fearful level, and we have to now look at context. And of course, I've spoken about context in a previous video. We need to look at these fundamental contexts. So we have to look at coronavirus, we have to look at fears of a potential recession. It's not just about technical indicators right now, because we can do as much technical analysis analysis as we want. But the thing is that, we have parameters on the psychology in the market. These are useful parameters usually, technical analysis. But these are useful parameters when the market psychology is normal. And now we're seeing unprecedented times where people are actually resorting to extreme behavior and stockpiling toilet paper. So a few weeks ago, stockpiling toilet paper would have come across as something very strange to us. But now it's actually a necessity for many people. People's fundamental needs feel very much threatened, which is why technical analysis won't be very good in outlining this psychology, because it's a very extreme psychology, one we don't see very often. So this extremely fearful level on the extreme fear and greed index, that has to be taken with a pinch of salt, and we have to bear in mind context, because this could potentially be a bullish context if we just look at this index and the extreme fear historically preceding price and reversals in Bitcoin's price action. But we have to bear in mind that we need to look at flattening the coronavirus curve, and we simply haven't done that in many countries. South Korea, Hong Kong, Singapore, they're already showing some signs of seeing that exponential curve turn into a logistic one. Something I spoke about in a previous video. If you'd like to check that video out, check it out in the top right hand corner. I talk about all these different growth curves and why they're important to preceding a reversal in Bitcoin's price action, because the coronavirus is affecting everything right now. And this is the stock market, or at least the traditional markets. You can see that everything is in the red. So it's not just crypto that's suffering, it's the entire traditional market. But if we talk about crypto and just talk about the stock to flow model, and you guys are probably familiar with the stock to flow model, we're going to see a supply shock around the halving. So that's going to be around here. And at the moment, we're actually seeing deviation in the stock to flow model. But this data point, even though we've seen that massive capitulation and that fantastic 53% crash in Bitcoin's price action, we're just seeing a deviation that is still within the bands that accommodate for this volatility, the bands of the stock to flow model. So it's interesting to see that this model theoretically and statistically, because this is co-integration, is very much valid despite this recent crash. So far so good when it comes to Bitcoin's price action, or at least the stock to flow model in the context of the supply shock that will come along in less than 60 days or so, and that is the Bitcoin halving. So this is a reason to be bullish on Bitcoin on a macro perspective, but that macro perspective will take months, and flattening the curve for the coronavirus will also take months. And that's something we have to bear in mind, because will we see a flattening of the curve around the halving? 2 months time? That's going to be about 60 days, 2 months. And when we saw that infection rate rise exponentially in Wuhan, and then we saw it really spread internationally, that took around 2 to 3 months itself. So I'm just wondering, now that China and South Korea are flattening their curve around 3 months later, 2 to 3 months later, we have 2 months until the halving. Will we see the flattening of the exponential growth rate curves in these different countries? Will we see this flattening coincide with the Bitcoin halving? That would be a beautiful script for crypto fans and Bitcoin investors alike. That would be a very fantastic coincidence, but we have to wait and see. That is definitely something that's on the table, but it's all about flattening the growth curve above all else. If we just look at the correlation matrix for Bitcoin and its correlation to a variety of different altcoins, predominantly large caps, predominantly figure highest on coin market cap. And if we just look at these leading altcoins, you can see that all these different correlations to Bitcoin, because of this Bitcoin crash, the correlations are very strong. And it doesn't really matter whether these correlations are going to be 0.93 in the blue, but the point I want to drive home here is that they are all positively correlated, and it's a very strong correlation. Of course, you're going to see an outlier in terms of USD Tether, because Tether is a stable coin, so that's a different story altogether. But overall, we're seeing a positive, strong correlation between altcoins and Bitcoin, and that's very much needed. It's very much understandable, because if people are selling off Bitcoin, they're also panic selling altcoins. So that correlation is going to remain strong, and it has to remain strong if we look at the altcoin market cap dominance, because as Bitcoin's price goes down, altcoin market cap dominance will also go down. There's not going to be a big change in terms of how dominant altcoins are in the market. And in fact, if we look at this technical analysis right over here, and I said earlier on the video that the technical analysis right now isn't really something to, it's something to be taken with a pinch of salt. This isn't taking into account psychology per se, because after all, this is an index of all the altcoins in the space. So it's a bit different. That psychology isn't necessarily being measured because we're seeing a general aggregation of data. And what we're seeing from this technical analysis here is that we're seeing a pullback in altcoin dominance following an exponential increase following that breakout from the ascending triangle. So what we're seeing here with strong correlations of altcoins to Bitcoin, that's perfectly normal and something that is needed for this ascending triangle top to be retested into a new support for altcoin dominance. So can you see how Bitcoin's price action and its capitulation is actually good for altcoins on a technical level? And that's something to bear in mind, because I'm not necessarily bearish on altcoins, although definitely it's very tough for the entire market. But if you're looking at altcoins on a macro perspective, it's actually, altcoin dominance is holding its macro structure, and many leading altcoins such as Ethereum BTC and Dogecoin, something we spoke about last week, these are still holding either their macro market structures like Dogecoin holding its ascending triangle, or Ethereum BTC respecting its historical price tendencies, even though we've seen a black swan event take place. But there is no denying that the coronavirus and its effect on Bitcoin's price action is going to be strong. The inverse relationship is strong, even though we're seeing a little bit of a decorrelation here. I wouldn't look too much into that. Of course, we're going to still see updating data as the day progresses, so this is still real-time data, and we're probably going to see an uptick in corona mentions going throughout the day. But the thing is that this correlation is very much present when we look at the keyword recession and Bitcoin's price action as well. So we're seeing that there are two very similar correlations, one for recession and Bitcoin's price action, and one for coronavirus and Bitcoin's price action as well. And these are very much correlated. And actually, if we look at this recent sort of decorrelating behavior that I wouldn't look too much into, when it comes to the recession, this correlation is still strong. And mentions of that keyword continue to go up, Bitcoin's price is going to continue going down. And this is a strong correlation that we just continue to see going forward. And it just makes sense, because if we just look at China, and I'm not going to go into too much detail here, this is the exponential orange growth rate curve for China. At some point, the lockdowns really did help. The self-quarantining and whatnot, that really helped in getting breaking down below the 33% daily increase rate. So breaking down from there, you're seeing a slowing down in the progress of this exponential growth rate curve into more of a logistic curve as we go along. This is the slowing progress that you want to see. But the coronavirus is impacting China very significantly and the world at large. So if you're seeing an exponential growth rate curve here in China, and I'm using China as an example because China's industrial production growth has hit the lowest level on record in January and February. Just look at how strong of a drop that was. China, exponential growth rate curve when it comes to new confirmed daily coronavirus cases, and now the lowest level in terms of industrial production growth. And it just makes sense. Workers are getting sick, they are ill, they can't be productive, and the supply chain is just shutting down. And this has an adverse effect on China, but the economy at large, because many other countries, like we see here, Spain, the UK, the US, we're seeing, and Iran as well, we're seeing exponential growth rate curves. And this is only going to get worse for the economy as long as these curves progress in an exponential rate, which is why we have to flatten the curve, very much like South Korea is actually managing to do quite well, and even China, even though we're still seeing some new cases on a daily basis, but it's more of a constant growth rather than an exponential one. So the coronavirus is an extreme catalyst that is affecting the entire world and the traditional markets as well as crypto, and the Fed actually injected $1.5 trillion into the market to just prevent these disruptions, but that stimulus, that monetary stimulus, did nothing to change anything in the markets. And that's a significant sign that the markets are most likely heading for a more significant downturn, and that any monetary stimulus at this stage can't save the market from its overextension and the fact that it needs to correct a little bit more, and that we may be on the verge of a recession. And quantitative easing, we're seeing already how that isn't impacting the markets, how it isn't helping traditional markets. Quantitative easing, so printing money, injecting trillions of dollars into the market to try and prop it up, that's one of the signs of a recession looming. The second sign is the Federal Reserve cutting rates, interest rates, to zero, or at least close to zero. This is something that tends to precede a recession. And quantitative easing, Fed cutting rates, this is a mixture. This is a combination, a concoction that precedes a recession, and we're seeing that in full force, in full effect, and it's not very good because we're seeing growing fears on social media in terms of the keyword recession, and we're going to continue seeing that as long as coronavirus is a factor in the economy and on a global stage. So the coronavirus looks like it's a negative catalyst for the recession, and we're going to see fears of a recession, and we're going to see markets downturning as long as coronavirus continues to persist around the world. And it will continue to persist as long as these countries continue to have exponential growth rate curves in the new daily confirmed cases of COVID-19. In any case, that's about it for the video today, guys. Thank you so much for watching. If you liked this video, please drop a like, subscribe for more videos like this in the future. I'm more than happy to be pumping out this content on a daily basis. So of course, if you found it enjoyable and if you found value in it, please consider dropping a like, subscribe for more videos like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak soon.